Welcome to Protect Your Assets Market Briefing. I'm your host, David Hollander, also known as the Sandman. Now let's get started. So yes, big week last week. The big beautiful bill passed, and now it looks like taxes will stay at their current level for some time, and that's good. The market liked that. The Dow Jones was up this week 2.3%, S&P 500 up 1.7%, NASDAQ up 1.6%. The MSCI International Index slightly up for the year, though, still up over 17%. 10-year Treasury sitting right at 4.35, and oil at $67 a barrel, 2 cents, keeping things in line there. And so overall, we have the S&P 500 and the NASDAQ up over 6% year to date. So pretty strong start to 25, even though it's been volatile. So what's going on with the overall economy, and will this rally continue? Great question. The U.S. economy this past week still looking pretty good, still chugging along. We had the June labor numbers come out, and the market overall labor rise is cooling down. Wages are slowing down a little bit, but still overall pretty healthy. We saw non-farm payrolls rise by 147,000. This was above expectations of 118,000. Unemployment rate fell to 4.1%, and the initial jobless claims also fell to a 6-week low at 233,000. So the big question is the rally sustainable? And so I'm going to continue to say it really depends on what you think about growth and what growth looks like, because if you think about it, is not as bad as feared good enough? It's another way to ask that question. And that is the question right now that you must ask yourself when you wonder about this rally, and is it sustainable for the rest of 25? That's because very little good has actually happened so far in the markets in 25. Consider this: tariffs are higher than at any point in the previous several decades, but positively they're not as bad as feared, which is why stocks rallied. Economic data, well, it's pointing to a loss of momentum in the biggest way we've seen since the pandemic, and economic activity is down from the start of the year. Positively, well, the tariffs haven't killed growth, which is why stocks rallied. And the world is a global tinderbox, with Russia and EU-US tensions as elevated as ever, while military activity and wars in the Middle East rage at a pace not seen since the 70s. Positively, none of the wars are impacting oil prices, which is why stocks rallied. Also positively, we are still thinking right now that the Fed may cut rates starting in September, and if that happens, that'll also be a positive for the market, and that's also why markets rallied. And add to that now the big beautiful bill. Looks like taxes will stay at their current levels for some time. Markets like that, stocks rally. So these are the things that we're seeing, but in order for this to continue for the rest of this year, it all comes back to growth. And if tariffs, whatever and however they are, and remember July 9th, if they don't stall growth, then the rally will continue. And if the key economic reports that we study are all the time, the unemployment, ISM, manufacturing, services, producer market index, retail sales, if they stay resilient, well, the rally can continue. But the bottom line is this rally is sustainable, but for that to occur, none of the actual bad things that occurred in the first half of 25 can negatively impact growth, because if they do, this rally won't just end. We'll be looking at a drop in the S&P to probably the sub 5,000s. Not as bad as April, but still, it's possible.
You can hear the Protect Your Assets Market Briefing on your favorite podcast app or as an Alexa flash briefing. Just search for Protect Your Assets Market Briefing. Links to subscribe free wherever you listen are at libertygroupllc.com/PYA briefing. The following program is paid for by Liberty Group, and the views and opinions of the host do not represent those of the station or its ownership. Investment advisory services are offered through Liberty Wealth Management, an SEC-registered investment advisor. Legal information provided on the air is not intended to be a substitute for callers hiring their own lawyers to advise them about personal legal matters. The information provided is general financial comment and cannot be relied upon for your specific financial situation. Investing involves risks, including the risk of loss of your investment. Please consult with a financial professional before investing. California Life Agent number 0B48569. You're listening to the Protect Your Assets Radio Network.